everyone, this is Riya Singh, Senior Research Forex Analyst for Nirmal Bank. So let's look at what has happened into the Forex market so far. Now, if you look at the policy rate, Bank of Japan has come out with its policy rate, and though they have maintained the rate at negative 0.1%, the surprise move was doubling down on the 10-year yield range. So previously it was 0.25 what they have stated, and in this current they have shifted it to 0.5. So if you look at their bond buying purchase programs, every time they have announced it is during the time frame when the yields have crossed 0.25. And even if you look at today's announcement, once the 10-year yields reached 0.49, Bank of Japan announced a bond buying purchase program. So all in all, it was a very surprise move of increasing this band to 0.5. This could be taken as a sign of a step towards the normalization of the policy from the Bank of Japan itself. The second thing, it was more surprising because we were expecting it to happen in the under the governance of the next Bank of Japan governor. But taking this step now will smoother the transition between both the governors after the month of April. So if you look at the Japanese yen, it is already at a high of 12%, but historically it's still cheap. So if these steps continue and such steps are taken, we could see USD JPY going beyond the level of 130. It could even see a lower of 128, 127 itself. Apart from that, if you look at the dollar, it has corrected quite a bit. It is trading near 104 levels. If you look at the US November data, the industrial numbers have not been very good. It is indicating recession fears. Also, if you look at the Fed, which is very adamant in keeping the interest rate high, so this is another risk that could lead to US going into recession next year. So all in all, what we can derive from these incident is, though the Fed is very adamant on keeping the rates, but the recession even coming near to the economy will lead to a trigger of reversing the policy, which we can see in anywhere in the second half of the next financial year. For the Indian rupee, it has been quite a consolidation range the whole December. It will continue to do so because the market will assess the Bank of Japan turn of stand on its bond yields, the more clearer picture by the Fed on its policy rates, and thus so we are seeing the consolidation range for the Indian rupee on a shorter term within 82.95 to 82 levels. The support maximum towards 81.95 in a shorter term basis. So a consolidated range, unless something really happens to push the dollar index on the higher side, but so far, unless any event triggers, the directional momentum will be quite far for the Indian rupee. Right now we are seeing only the consolidation moment. So follow these levels of 82.95 to 81.95. So this is the 1 rupee range that you can see Indian rupee moving forward with. So that's all on the currency front. Thank you for joining in.